Hi, this is Soumya Sarkar from Wealth Redefine. We will be talking about today about mutual fund versus ETF. A lot of time we have now seen that the momentum of ETF has slightly on rising. वीडियो को लास्ट तक देखें और चैनल को सब्सक्राइब जरूर कीजिए. So a lot of people are now investors are interested on the ETF. So let me give you a example with a pizza and pasta. Pizza is like a ready-made, nothing extra, everything is fine. And pasta is something which you have to decide which sauce you want, how you want, and everything. So it's a customized. Mutual fund here is almost like a customized thing. But pizza, which is ETF, is non-customized. It is just like the same like an index and other things. And you can invest into that. Let me now give you the clear description between how both the things work. So number one point which I like to mention is the management. ETF is like a Tesla Autopilot. Tesla is now coming in India and there is a self-driving. So you put the money, it get invested. But if you look at the mutual fund, it is like a sedan or a Rolls Royce with a driver. You can customize, you can go for a large, mid, small, you can go for multi-asset and all those things. So primarily there is a difference between management. It is just you put the money into the market in ETF and it get invested. But here there is a cash component, the fund manager can have a debt, fund manager can have something. So you are just riding based on a professional driver. Fund manager is the driver who is running your fund and generating profit for you. Point number two, which I'd like to say is that trading. It is a fast food versus fine dining. What is fast food? ETF is like a fast food. You just buy it and forget about it. You just check the returns, you just check the movement and you get out of it. But when we are going for a mutual fund, it is like a fine dining. You can customize, you can go for high risk, low risk, all kind of things are available. Obviously you cannot choose the stocks, but even if you go to the portfolio and decide that this fund is having this kind of stocks which you want to buy, you can go ahead with that thing also. Third point which I'd like to say is the minimum investment. ETF is a minimum investment of 100 rupees. But mutual fund as of now is a minimum invest of 500. There is a micro SIP that is 250, but minimum investment of 500. But when you are going for an ETF, you just put 100 rupees, you just put 100 become 110, you can take out the money and make a 10 rupees profit. So it is more of a quick decision making, where here is more of a wealth creation. Because there is a minimum amount is there, obviously 500 rupees, 1000, let's see, that way it is more of a wealth. Fourth point which I like to mention is the tax. Both have tax liability, but ETF is a quick gain, quick return and quick sell and all those things. So you will just only most of the pay the short-term capital gain. Mutual fund is a wealth creation. So when you create the wealth, you have a short-term, you have a long-term capital gain, and you pay a 12.5% tax on after having a deduction of 1.25 lakhs, you have a 12.5% of tax liability. But ETF, is a more of a self-driving the car at a fast pace, while mutual fund is a backbone of the wealth creation. If you look at ETF and the mutual fund, we have seen that people actually who have created a very big amount of wealth usually invested through mutual funds. Definitely mutual funds has a several directions, same as ETFs has, but if you look at the overall thing, mutual funds are much more stable and professionally managed. ETF, you have to manage by yourself. You must have the market knowledge, you must have the time, you must have the other things for managing an ETF. But mutual fund have the two things. One is that your financial advisor or mutual fund distributor will help you, and then there is a fund manager who is going to help you. And at the time when nobody is guiding you, in ETF you have to do it by yourself. Suppose market is falling tomorrow, you have to be patient enough for you to understand whether you should take out the money or you should continue the money. But in mutual fund, there are a lot of guidance. The fund manager itself can go to that debt or cash and hold the money and wait for the market to fall farther and probably then buy. So it is a very well managed thing. These are the primary difference between ETF and mutual funds. This video is only for the educational purpose, not to recommendation to buy or sell of any securities. If you like the video, you can subscribe to the channel and you can send us more questions regarding this if you have. Thank you for watching.